183 days. That's the magic number every retiree moving to Florida or Texas or Nevada or any no-income tax state needs to know by heart. Spend even 1 day fewer in your new state, and the high tax state you left can pull you back in. They will audit. They will demand returns. They will collect. It happens more often than people realize. New York, California, New Jersey, and Massachusetts each have departments dedicated to chasing retirees who claim to move but didn't actually relocate. They look at credit card swipes, cell phone tower data, gym check-ins, and even golf course attendance to prove you spent enough days in their state to still owe them income tax. In the next 10 minutes, I'll show you the 183-day rule that makes a domicile change real, the exact forms to file the moment you arrive in the new state, the paper trail that holds up under audit, the 4 red flags that trigger a residency audit, and the state-specific quirks that catch retirees off guard. There's a quiet moment about 6 months after you finally finish unpacking in Florida. Your mail forwards from New Jersey have stopped. Your bank statements show your new address. You assume the move is done. The state of New Jersey doesn't agree. As far as they're concerned, you're still a New Jersey resident with a vacation home in Florida. They're still entitled to tax your IRA withdrawals, your pension, your Social Security taxation, and any capital gains you realize. The burden of proof that you actually moved is on you. Today we fix that. 5 specific moves. Move 1. The 183-day rule and what it really means. The general rule. To establish domicile in your new state, you must physically be present there for at least 183 days of the calendar year. More than half. But here's the trap. Several states, New York is the most aggressive, apply additional tests beyond just day count. New York uses what they call the statutory residency test. If you maintain a permanent place of abode in New York and spend more than 183 days in New York during the year, you're a statutory resident regardless of where you claim domicile. The implication: selling or renting your old home matters. Just buying a Florida house and visiting it occasionally isn't enough. Keeping the old house, even if your spouse stays there occasionally for grandchildren, keeps you on the New York tax rolls. The math: 184 days in Florida, 181 in New York. New York day count is what New York counts. They round up. Crossing the state line at midnight on day 183 counts as a New York day, even if you barely touch the ground. Move 2. The exact forms to file the moment you arrive. The moment you become a resident of Florida, or Texas, Nevada, Tennessee, South Dakota, Wyoming, Washington, New Hampshire, or Alaska. File these in order. Form 1. Driver's license. Surrender your old state's license and get your new state's license within 30 days. Most states require this by law. Your new license is documentary evidence number 1 for any audit. Form 2. Voter registration. Register to vote in the new state. Cancel your old registration in writing. This is documentary evidence number 2. Voter registration is one of the strongest signals of domicile because it's verifiable through public records. Form 3. Vehicle registration. Retitle and retag your cars in the new state. Most states require this within 10 to 90 days of establishing residency. Form 4. Update your mailing address with the Social Security Administration, the IRS, all banks, all brokerages, and your insurance companies. Use Form 8822 for the IRS. Form 5. Declaration of Domicile. Florida specifically has a form called the Declaration of Domicile. Sign it, notarize it, file it with the county clerk. Texas and Nevada have similar forms. This document creates a sworn statement that you've moved and intend the new state as your permanent home. The magic sentence for your county clerk. Quote, "I want to file a declaration of domicile." End quote. They'll know exactly what you mean. Move 3. The paper trail that holds up under audit. A residency audit can go back several years. The auditor wants documentary evidence of where you physically were on specific dates. Build the paper trail now, not in response to the audit. Items the auditor will request: credit card statements showing daily purchases by location, cell phone bills showing roaming and tower locations, gym membership swipes, hair salon and doctor appointment records in the new state, utility bills showing usage patterns at your new home. If your new house has zero electricity usage for months at a time, that's a problem. Take a chap I sat with. Call him Henry, 68, retired teacher from upstate New York, moved to Naples, Florida in 2022, filed all the right paperwork. New York audited him in 2024. They demanded proof he spent at least 183 days in Florida. Henry had no records. He had to dig through credit card statements, EZ Pass records, doctor appointments, and even his Florida Country Club's tea time logs to reconstruct his calendar. He spent 12 weeks gathering documentation. He won the audit by 16 days. 12 weeks of his life to prove a difference of 2.5 weeks. The lesson: keep a simple calendar, paper or digital, marking every day you're in your new state. Save credit card statements. Note medical appointments by location. Make it easy on yourself before the audit notice arrives. Move 4. The 4 red flags that trigger a residency audit. Red flag 1. You file a part-year return in the year you moved. State auditors specifically look at part-year filers because the partial year claim signals a residency change worth investigating. Red flag 2. Your AGI jumps significantly in the year before or after the move. A retirement, IRA rollover, or business sale that increased your income makes you a bigger target for audit recovery. Red flag 3. You maintain a property in the old state, even a rental property in your name. The auditor will scrutinize whether you spend any time there. Red flag 4. Your spouse stays behind. If your spouse remains a resident of the old state, common when adult children are still nearby, the auditor will assume you visit frequently and look for evidence you spent more than half the year there. Take Margaret, 68, moved to Naples with her husband Frank. Frank stayed behind in Cleveland for 3 months after the move to handle property logistics. New York would have flagged this immediately. Ohio is less aggressive but still required documentation. They saved themselves trouble by having Margaret stay in Florida the entire time and showing flight records, restaurant receipts, and her new Florida doctor visits. Move 5. The state-specific quirks. Each state plays the residency audit game differently. The ones to watch. New York, the most aggressive, uses the statutory residency test in addition to domicile. If you keep your New York apartment plus spend more than 183 days in New York, you're still a New York resident even if you've technically moved to Florida. California, almost as aggressive, uses a domicile and physical presence two-prong test. Also taxes deferred compensation earned while you were a California resident, even after you leave. The clawback can stretch years. New Jersey goes after retirees who move to Florida specifically. They look hard at pension and IRA withdrawals. Massachusetts, statutory residency similar to New York. Day count audits common. Texas, Florida, Nevada, and other no-tax states. No income tax to fight over, so no audit risk from their side. Your only exposure is from the state you left. If you're moving from New York or California, hire a state tax attorney specializing in residency before you move. $200 for an hour of advice can save you $20,000 later. You've worked decades and paid into the high-tax state long enough. The move to Florida is supposed to be the reward. Don't let one missed filing turn it into a multi-year audit. 5 moves. Hit the 183-day count. File the 5 new state forms immediately. Build the paper trail now. Watch the 4 red flags. And know the state-specific quirks of where you're leaving. If even one of these saved you $1, hit subscribe. New videos every Tuesday and Friday. In the comments, tell me which state you moved from and to. I read everyone. I'll see you in the next one.